Hello traders, welcome to the Volume Profile plus Elliott Wave Blocks course part 2. It's a pleasure to share with you this lesson today. It's going to be shorter than lesson number 1 because on lesson number 1 we were checking the basics, the theory, the way to draw the blocks, the basics of volume profile. So actually it was a lot, but today we're going to see examples and today we're going to see the multiple time frame analysis using this technique. So let's start directly with the first example that we have for today. And this is an hourly ES chart. Don't forget that this technique can be applied on any instrument, any time frame, any trading style. So this is just an Elliott wave block on the hourly chart. But the next step in this process, yesterday we have the basics about how to draw the Elliott wave blocks and all these things. But when we are in higher time frames, on the daily chart, on the 4-hour chart, on the hourly chart, usually this is a huge Elliott wave block. So the thing is that we need to improve the area. So we can start doing a top-down approach by starting from, let's say here, the hourly chart. And when we decrease the time frame, if we go to the 30-minute chart, and of course we're going to do the whole exercise. But the plan is that when we start decreasing the time frame, and we are checking that in a second, the Elliott wave block is gonna be smaller and smaller and smaller and smaller. So we are going to have a better price, a faster price to trigger the trade. So this is the hourly chart. Let's leave the hourly chart Elliott wave block and let's move into the next time frame that will be the 30-minute chart. On the 30-minute chart, by drawing the Elliott wave block that is in a pink background, then we have also the blue background that is the hourly chart or Elliott wave block, we can see that we are starting to improve the entry because by reducing the size of the Elliott wave block, we can accelerate the entry. So on the 30-minute chart, here we can have a better entry, but still is quite the same as the hourly chart Elliott wave block. So we can continue drilling down. Let's have a look at the 15-minute chart. This is the orange box here. So we have the blue box, that is the hourly chart Elliott wave block. We have the pink box here, that is the 30-minute chart. And we have the orange background box, that is the 15-minute chart. So you can see here how by moving to lower time frames, we are improving the area. We are making the Elliott wave block smaller, more precise. Let's continue to the 5-minute chart. Look, right here on the 5-minute chart, we are having this box here. So we are improving the entry. So we were able to improve the entry for a lot of points by moving to lower time frames. What if the price rejects the 5-minute chart and we're expecting the 1-minute chart? Right? For example, in this case, right here in this area, we got rejection, so we need to sell it right there, right? Because sometimes it's not going to complete the internal Elliott wave blocks, and we can miss the trade. So if we like it and we add other things like the momentum analysis and the Elliott wave count and the other things, and we like it, we can sell it, right? But if the price keeps trending higher, like in this case, and rejects the internal 5-minute Elliott wave block, well, we will need to sell it right there in the inside. So what if we go to the 1-minute chart? Let's do it. Wow, look, on the 1-minute chart, we have another Elliott wave block coming from the 1 minute. It will be this box here, this one here, right? So when we extend the Elliott wave block on the 1-minute chart, look the precision of the setup, right? The price rejects precisely there, so we can improve the execution by moving to the lower time frames. Of course, not always you have to end on the 1-minute chart. Of course, let's say that you start drawing your Elliott wave block on the daily chart, and then you move to the 4-hour chart to improve precision, and then you continue scrolling down to the, let's say the hourly chart, and there you can use it, right? But my point is that when we start looking for lower time frames, what we are doing in technical analysis is accelerating the entry. That's why we move to lower time frames. So that's an easy way to understand how this works and how the multiple time frame analysis can help us to improve our trades. So this is the theory. Let's start checking some examples here. Because the Elliott wave blocks worked on any time frame, any market, let's have a look here at today's price action on Meta. This is a stock. So this is a 15-minute chart. Let's keep it simple. We have a leg up. That could be a wave 1, that could be a wave A, whatever. And on the next slide, I'm going to develop a little bit more about that idea. The price comes down to the 15-minute chart Elliott wave block. To refresh what we were checking yesterday, what I was teaching yesterday, the way to draw the Elliott wave block is by looking for the candle that has the lower low of the previous cycle. And in this case, is this green candle. The shadow is here at the low. And we are going to include the next candle. So actually, I'm building the Elliott wave block from the low of that candle to the high of the next candle. Right? So that's the way to draw the Elliott wave block. And when we extend, we can see that the price moves inside the Elliott wave block and then jumps back above the area. So if we are trading here, the entry was here at that candle close. The stop loss is going to be here. But if we want, and that's fine, that's a trade. But if we want to improve the entry, we can visit the next time frame. So let's go to the 5-minute chart. That could be fine. So and let's see the difference. Look, on the 5-minute chart, I leave the 15-minute chart Elliott wave block, that is the bigger box. And now here, the green box is the 5-minute chart Elliott wave block. We can see the difference in terms of the entry. The entry on the 5-minute chart is right here after the close of this red candle, this spinning top formation. You can see the tail that today we have here on Meta. The tail, right? The tail is the validation. That tail is the validation. So we can go long at the candle close. That will be here, the entry point, when the red candle closes because you reject it. Right? The stop loss could be here. And we can see the advantage of using a lower time frame. So for a day trade, this will be perfect. This will be a perfect setup. Now, what if I want to find out why the price bounced here? Because yesterday we were saying that 99% of the change of direction of the price, of the bounces or the levels where the price changes the direction, it's because there is an Elliott wave block from the past. So if we zoom out on this chart, we can see it. So that area, when we zoom out, is right here, and is the area where we have an older Elliott wave block. So the price precisely comes into this area. Let's suppose that our bias is bullish and that we want to go long. This area was the first area to reject, but as we have been seeing now adding the profile, when we have imbalance, we have to look for balance, right? We have to look for price to show a little bit more of imbalance, and actually this will be the first entry, not this one, because we need to look, first of all, the auction, right, as we were seeing yesterday. So this is not a trade, this will be a trade. And that one didn't work. The price moves a little bit lower. Then we have a second entry. That one works nicely to book some profits. And then we have the one that we are right now in the live market. So that's the process. Let's have a look at this one here. So the price was moving up, eventually starts selling off. We have a leg down. We have a rejection. We have a test of the Elliott wave block. We have a rejection. So that's a sell trade. The price moves down. We have another attempt to move back into the Elliott wave block, and look at this beautiful rejection. And here is the balance market. This is the imbalance, this is the balance, and this is the imbalance. So we have in the middle this profile. So this is cheap to sell because this was the fair price. Right? So that's the process. This is a beautiful trade. This is a perfect trade. This one that we are here live in the live market is pretty good as well. Right? If we were scalping, we were day trading, and we captured the trade from this rejection, that we have also the balance and imbalance, right? Imbalance, balance, imbalance. There it is, right? That's why this is not a trade, because this is just the balance of the market, and we need to wait for an imbalance, and this will be the first entry, or this will be the second entry, right? So from here, we can expect traders, and this is a live chart because I take it after the market closed, we can expect the move up back to this area list, to this Elliott wave block or to this Elliott wave block. So this is an active setup. Let's have a look at another active setup. Let's have a look at the dollar yen. The dollar yen is a trade that today in the membership we started to follow. So let's have a look from the Elliott wave perspective and the momentum perspective and the Elliott wave block perspective and the profile perspective. So in this chart, we have a lot of things. Let's start with the Elliott wave count. As you can see, I'm looking here for the completion of a second wave, wave 2, looking for another leg up back to this area. So that's the plan. Wave 2, looking for the price to move back to this area. So we need to find buyers. So the next step is adding the Elliott wave block. So right here, we have our Elliott wave block in this area. Class number 3 is going to be exclusively for members, and it's going to be about the connection between the Elliott wave blocks and the Elliott wave theory. So on the next lesson, we're going to cover how to pick the right wave to do our analysis. But today we're checking the Elliott wave block here. So we have there the rejection of the Elliott wave block. So today in the morning, when we got the rejection, I triggered my trade at the 130.89 area at the rejection, and then and the stop loss at the 130.59. So just below the low, we are talking a distance of 30 points. 30 points. The price during the session was able to move to the 20s. So 30 points, 1-to-1 risk-reward ratio. And then the price moved a little bit higher, and I think right now is doing some sort of a retrace. But it's already a safe trade. So no matter what happens next, it's a break even because I already booked partial profits, 50% of the trade. And if it works as we are expecting, it's going to be a home run. Also, we have the profile, the volume profile tool. So right here, traders, we got the point of control. That is the fair price of the auction. Every cycle in the markets is an auction. So right here, we have the fair price of the auction. When we trigger the trade down here, we are having a discount because price is below the point of control. As we were seeing yesterday, the volume profile is not the one that is going to provide the direction or the entry or the forecast. Yesterday we were talking about the forecast, or talking about knowing the future is impossible. We can read the current supply and demand, and based on that information, we can act and we can plan a trade, right? So of course that's the process. But you can see how we are using all the tools for each setup, right? And that's extremely important. So let's have a look at that Elliott wave block. Now the details. We got the price moving inside the Elliott wave block, and after that, we got the rejection. It is extremely simple at the end. That's something important to understand the tools, but also to have a simple trading plan at the end. Also, we can use the momentum analysis. As you can see here, I have a MACD, and we have a whole course on the MACD inside the Members Academy to use it with Elliott wave. So here we have the price reaching lower lows, right? Low, lower low, lower low, lower low. When we check the MACD starts doing the opposite. So here we have the lowest peak, and from there, the price moves down, as we can see, but the MACD is doing the opposite, is moving up. So what is that telling? And again, we have the whole course inside the Members Academy about the MACD, but the meaning, traders, when the price loses momentum, is that someone is buying, is that demand is entering the market. Because when the price slows down, it tells that someone is buying. That's the meaning of when the price is losing speed or losing momentum, right? So this is extremely important because we can start understanding, or we can start having this additional confirmation. So that divergence tells that the market is losing momentum, but a huge mistake is to try to go long because we have the divergence. That's a huge mistake. And a lot of beginners are going to lose a lot of money when they try to trade the divergence. It doesn't work like that. So the price losing momentum is just telling that someone started to go long, someone started to buy, right? But that's it. So after we have the price losing momentum, the price testing the Elliott wave block, the Elliott wave trading plan, the price far from the point of control, we can trigger the trade. Right? It's simple. It's simple at the end. All right. Oh, look at this example here, just to explore a little bit more this chart. Look, the price in this example moving up, and we were also checking this one on the live market last week, and the MACD moving down. If someone tries to sell the divergence, is going to finish extremely frustrated, as most of the techniques in the technical analysis world, right? So because it's extremely frustrating to have a divergence and more divergence and more divergence. But what if instead of thinking like that, we start saying, oh, here someone is selling, so they are getting ready the distribution process, right? I can sell here at the rejection. The price makes a hard high. Okay, so I can sell here at the rejection. Probably I got to stop out. But look at the distance between this high and this high. this distance is pretty big. And look at the distance between these two new highs. It's getting smaller. Okay, so it's losing momentum. Right? Then we have a fresh high, and the MACD is even more divergent. And the distance is pretty tiny. So if we add that little filter, we can filter out this trade. This is not good. This one is good. And of course, this one is good. Right? And that's the way to act on multiple divergence, understanding the distribution process. But in this case, it's pretty clear, the setup and everything. So now we have a safe trade. Let's have a look at another example. Yesterday on the S&P, we were checking the live chart on the first class. We were saying that the S&P was likely to move under the wave A. We were somewhere here. So we said if someone wants to short, he needs to sell after the B. If someone has the short bias, he needs to sell at the end of B at this rejection, whatever, an Elliott wave lock on a lower time frame, whatever, right? Right here at this area. And he needs to sell above the point of control. Above the point of control is above the fair price. So that's good. So the main plan for today was having the S&P falling under the wave A. We don't know the shape that's going to take. We can't anticipate that the price is going to give us this big red candle. Of course, we can't go to that level of detail. We just know that the price is moving down. So the price moves down. In this particular case, I couldn't find an Elliott wave block to help us finding this leg here. I was looking for this one, but it's not at that level after this red candle. But we are going to work with an Elliott wave block on the next chart for a live trade. So the price rejects and moves back to the point of control area. Right. So we have this rejection here. Okay. So what's the next plan? The next plan on the S&P, traders, I'm looking for the S&P to move back to the previous high. And this is the fair price. So we need to plan here the trade. I didn't trigger my trade here. So let's plan it together. So when we go to a lower time frame, this is the 15-minute chart. We can let's go back for a second. So the area that we are going to study on the 15-minute chart is going to be this leg, right? So when we move to that chart right here, we can see that there is a 5-wave sequence. We can say, okay, this is 1, this is 2, this is 3, this is 4 as a leading diagonal wave. The wave 4 moves inside the wave 1, so it's a leading diagonal wave, and this is the wave 5, let's say. That could be the wave 1 at the same time. And here, we are planning buying after the second wave. So we need to have the price moving into our Elliott wave block here on the 15-minute chart. If it rejects here, let's say, it's a buy trade. If it moves a little bit deeper, we need to add the 5-minute chart Elliott wave block. So let's do it. I have that one for you here as well. So we have the blue box, the blue border box is the 15-minute chart Elliott wave block, while the orange border Elliott wave block is the 5-minute Elliott wave block. Now, here we have wave 1, here we have wave 2, here we have wave 3, here we have wave 4, and here we have wave 5. Great, that's our wave 1. Perfect. We're on a 5-minute chart. But what else we can add to this narrative? What else we can add to this analysis? Well, the profile. I can add the profile from the low to the actual price. And let's see where is the point of control, because we know that that's important. And here we have, traders, our point of control. Okay. So if the price moves down as we are looking for the price to move, and this is a live chart, just take this screenshot a couple of minutes before the class, so it's live market. So, and actually the price is precisely there, still at the 1450. So the price, let's say that the price moves down. Now we're talking about scenarios. Now we're creating a plan. So the price moves down. Let's suppose that after reaching the 15-minute chart Elliott wave block right here, we have a green candle showing up here. Oops. We have a green candle showing up here. Let's say that we have something like this. And we're in front of that type of a scenario. If that's the case, we need to go long. Right? We have to do it. And the stop loss is going to be here. Under a couple of points, under the rejection, the entry point is going to be here. The target is going to be here. Or the Elliott wave block. We can use the Elliott wave block. That's going to be a minimum target. So we know that that's the risk. This will be the risk. And this will be the profit for a scalp or for a little day trade, whatever. We can do a lot of things around this plan. We can book partial profits at the 1-to-1 to have a safe trade. That's my style. I like to book partial profits. We can then book some extra profits. Let's say that we have 20 contracts, and here's the entry point. So at the 1-to-1, I can close 10. At the previous Elliott wave block, I can close another 5 and keep 5 contracts. And if I have the home run, later I can close the other 5 contracts, and that will be a huge trade. That will be the best scenario, right? The worst scenario, that after triggering the trade, the price continues lower and takes out the stop, right? That can happen as well, of course. And let's talk about a different scenario, because always when you are planning your trades, you have to think about everything. It's not about if you are right or wrong, and never feel bad because an analysis or a trade that you were looking didn't work. It's part of the process. It's part of the business. It doesn't matter how many years of experience you have. Always, you're going to have trades that don't work. That's it. It's part of the business. So don't feel bad. Don't do crazy things. Don't move your stop loss. Don't try to trigger again the trade. Don't increase a lot the stop loss or remove the stop loss. Don't do the crazy things. When you make the decision, wait for the trade to develop. If it hits the stop loss, that's it. Cut your losses fast. Let the winners run. That's it. But let's talk about a different scenario. The price starts moving down. Let's say that at this area, we start having some sideways price action. So the price builds some balance here, a profile, an internal profile. Then the price continues lower, but now slowly, if we add a MACD or something, is losing momentum, and we have 2 reference points, 2 lows to compare the momentum. And on the 5-minute chart Elliott wave block, that is this box inside, after the price moves inside that area, we have a nice green candle closing above the Elliott wave block. Oh yeah, we got our entry right here. This is a different scenario, right? So we will have our entry point here. The stop loss will be here. So 2-3 points of a stop. Great, right? And we repeat the process. If we reach the 1-to-1, we book partial profits. If we reach the previous Elliott wave block, we book extra profits. If we have the home run, we book extra profits when the price stops trending, right? And that's going to be another scenario that can happen. So here we are setting our mindset and our plan for the session, and we are in the live market. So we are planning. So those are the options. Those are the ways that I'm going to act. Always having a plan is important. Now let's talk about things that can happen that we are not going to do anything, because always is important to think like that as well. So let's talk about a different scenario. Let's say that tonight, whatever, during the London session, whatever, we have the S&P from here departing 200 points to the upside because X news hits the market. Wow, interesting. Well, I miss it because the price didn't complete my setup. Let's talk about a different extreme. The price here collapses and moves 500 points to the downside. A new pandemic is announced over the night. So the price moves down 500 points, let's say. Talking crazy things. And we have our wave count thinking that this is a wave 1 and that the price was going to build a wave 2. So we are not going to feel bad or something like that because we didn't trigger the trade. But of course, someone who triggers the trade because he's the second wave or because the price is far from the point of control, he's not understanding how this works. Remember, this is only valid if we have demand during the process, and how we can find demand either with a rejection here or a rejection here. Those are ways of finding demand while the price moves down. If the price moves down with a huge candle or huge candles without rejecting, we don't have anything. So we are not going to waste our time and money trying to capture something that clearly is not going to reject, right? So those are key things that most beginners especially don't understand or don't use in the proper way. So I have been seeing that several times, Imagine this scenario. Price moves down with this red candle. And the beginner believes that this is wave 1 and this is the wave 2. Oh, fantastic. I'm having a beautiful discount. I'm going to leave my protective stop loss below the low. And I'm going to buy here. After that candle, come on. Of course, the price is going to take out that liquidity area and it's going to continue. And no matter that you're drawing here a wave 1 and a wave 2, it's not going to work. You need to see the price moving down slowly, rejecting, divergent, losing momentum, using the Elliott wave blocks, an ABC, a balanced market in the middle, right? In order to find a trade. That's the proper way of doing this. So when someone uses the Elliott wave theory as a triggering system, of course it's not going to work and it's going to finish extremely frustrated. The same with the MACD, the same with the volume profile. Those are tools to understand the market, but are not tools to trigger the trade. The Elliott wave blocks are tools to trigger the trade because are helping to understand supply and demand in the real time. But we can't forecast if that's going to reject or not. That's impossible, right? That's impossible. We need to wait and see the price rejecting, and that's when we are saying, okay, that's our trade. Let's have a look at another example here. So this is the Aussie dollar. This is the price action from today. This is an hourly chart. Of course, after the fact, everything is easy. When we are in the live market, it's going to be a little bit more complex. But if you have a good understanding of the technique, you are going to see it. Of course, practice a lot. Practice a lot, and I promise that you are going to start seeing it after practicing and practicing. So, look, here we have this Aussie dollar. First of all, we have the price was going up, and eventually it started to sell off. Who can trade this thing here? There is no way. Impossible, you know. Maybe someone selling because he was seeing a divergence on the 1 minute chart or that type of thing, and not leaving on a stop loss. But that's gambling. You know, that's the only way, the only logic way I see capturing a leg here. Okay, so the price moves down. Great. We can draw our Elliott wave block on the hourly chart by taking the last candle that reaches the highest high and the next candle that will be this red candle. So look, here to draw the Elliott wave block, I'm using the last candle, that is that long tail candle, and the next candle, always with 2 candles, right? So that's the way to, and then we project to the right the rectangle. It's extremely objective, the Elliott wave block. And we wait. We sit here and wait, right? It's like fishing. You wait, right? And sometimes you need to wait for hours. So the price starts moving up. Okay, good. From there, the price can collapse. From there, the price can move up and move 500 points. Good, you're waiting. Great. Eventually, the price starts finding balance because he's sideways. He's finding some sort of value here. Great. The price moves up, hits the Elliott wave block, and look at that tail. The candle closes, leaving the tail. That's something that you are seeing live. That's something that you are not trying to imagine. That's something that you are not trying to forecast. That's something that you are not trying to use a crystal ball to find out what is going to happen in the future. You are not reading the future. You are reading the present. Real time, right there. You have the tail. The candle closes well far from the area. Okay, so if you like it, because that, of course, your opinion is important right there. So the entry point will be right there at the candle close. The stop loss could be here. So this is the risk. You look for your 1-to-1 risk-reward ratio, roughly there, a little bit higher, but that's fine. You book partial profits. And here you can start looking for the next Elliott wave block area. In this, once the price enters, if it doesn't reject, you can hold it or you can book some extra profits. You wait. Look, here you have another Elliott wave block. That will be the next one, because this one, the price crosses the Elliott wave block nicely to the downside. Again, you are live. You are seeing that in the present. You are not imagining things. You are not trying to figure out the future, because that's not our job. Our job is not to be thinking like that. You know, I don't care the future. I care to make money. That's it. So the price moves inside this Elliott wave block, and we start seeing some tails happening here. This setup is a little bit more complex because we don't have any balance. You know, when I see this type of setup, I will wait. I'm not going to buy this one. I'm going to wait for some sideways price action, imbalance, rejection, and buying here. But of course, these are little details that with experience, you can start seeing them as well. An aggressive trader will say, nope, I go low here. I will use this one more to book profits rather than to buy the Aussie in this particular case, because the price was coming down too fast. And of course, all those details, we cover all these details inside the membership, like the speed of the market, the divergence, and all the other things. You know, but now with the Elliott wave blocks, it's going to be fantastic, the things that we are going to do inside the membership. So that's it. Right? Now we can add the volume profile to this narrative. So here, I'm taking the tool from the low to this high to replicate how the profile was looking when this rejection happened. So let's ask another expert. Let's ask our friend volume profile. Hey, volume profile, do you think it's a good idea to sell here? Let me check. Let me organize the data. Let me calculate the standard deviation. Okay, so this is the fair price. And you are saying that you want to sell here because you have a rejection of an Elliott wave block? Yes, sir. That's what I'm saying. Okay, so that looks good because this is the fair price. And if you are triggering here, you are having an advantage from the entry point to the fair price. You are having a really good advantage here, my friend, because you are buying above the fair price. Sorry, you are selling above the fair price. So you are selling expensive. Yeah, it looks good. All right, thank you. Thank you very much for your expert opinion. Now let's move the tool from this low to this low. If someone was trying to buy here, again, this is just an educational setup here because I wouldn't be trying to buy this one. No, I don't think so. So now let's extend the tool from this low to this low, right? And it's roughly the same. The profiles when we extend the tool are most of the times are going to be roughly the same because that's the fair price. So here is the fair price. And this trader wants to buy here at this one of these rejections or all of them, whatever. So let's ask if we are here. Let's say that the trader wants to buy here after the green candle, let's say, and the stop loss here, right? And this is the risk, let's suppose. And we ask again our friend, the volume profile. Hey, volume profile, do you consider this is a good trade? Let me check my data. Let me organize the data set. Let me find the fair price. Yep, this is the point of control. This is the POC, point of control. And you are saying that you're down here? That looks good in terms of the profile. Don't forget to check other things. Price losing momentum. If you have an Elliott wave block on that area, if you have the demand building a accumulation process, right? But from my point of view, as a volume profile, I like it. Right? So we are buying cheap. Right? And of course, when you understand how the market cycles work, you can use anything. You can use Elliott wave, that I really recommend mastering Elliott wave. You can use the Elliott wave blocks. You can use the bullish engulfing candle. You can use anything that you like, but you're understanding where you are, and something that you know that you are not going to do here is selling, because never in your life you're going to sell below the point of control. That's crazy. As we were seeing on the first class, that doesn't have any sense, selling below the point of control. And even more when we are far from the fair price. We know that the price is likely to bounce back to the point of control. So the only thing we can look for is buying. Right? And then we check the setup, and then we say, okay, I want to have a lower low, or I want to trigger, or whatever. That comes with experience, because trading requires a lot of experience. But you know what? It requires good experience. Because if the trader is applying everything in the wrong way, is not understanding what he's doing, but is having experience, is having a bad experience, and he's wasting his time, and he's losing time and money, and he's not going to make it. So practicing is great, but make sure that you're understanding properly the technique, and you're understanding properly the market cycle. Other way is not going to work. All right, traders. So with this example, we have the completion of part 1 and part 2 of the Elliott wave blocks course. The third part and the fourth part is coming exclusively for Elliott Wave Street members. So just for getting this course is a great plan that you sign up for the membership, so you will get access to the course in case that you don't have your membership. And I'm going to show you in a second what the following master classes about this course are, what we are going to cover. So, but first of all, you have to visit elliottwavestreet.com, click on the membership tab, pick your plan, Forex, stocks, or full access. In all the plans, you're getting the course. Start your membership, and you will get this course. You will get the volume profile course. You will get the MACD course, the Elliott wave crash course, plus my daily analysis Monday through Friday with charts, with videos, with the one waves report some days in the weekend during the afternoons with key updates. Right? So you're going to have a lot of good things here. So sign up and you will get immediate access. Plus, you are getting access to the next 2 master classes about the Elliott wave blocks. And this is just exclusively for members. So the third class is coming next week, April the 12th. We are going to talk about integrating Elliott wave blocks with Elliott wave theory. So in this special class, we are going to work with Elliott wave and the Elliott wave blocks, now using each retrace or each corrective wave to spot the best Elliott wave block. And on the next masterclass will be the fourth masterclass here, will be April the 19th. We are going to create strategies for trade execution and management. So here we are going to look for specific entries with the best stop loss, with the best profit. And of course, we're going to have a lot of live examples. Over these 2 weeks, we are going to, or 3 weeks, we are going to look for a lot of examples inside the membership in the live market analysis, so you can see the technique in action, also using the volume profile. All right, traders. So I'll see you inside the membership. Thank you very much for being here. As always, it's a pleasure. If you have any question, please contact us. Here you have the email, the WhatsApp, the Skype. And I think that's it. So thank you very much for being here. Please have a fantastic rest of your session, of your night, or your day, depending where you are. And I'll see you soon. Thank you very much. Take care. Bye-bye.